Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, and I'm joined with Greg Willett, the Vice President for Research and Analysis at MPF Research. And today we are starting a 6-part series on what to watch for in 2011 in the apartment industry. And today we're going to start the conversation with jobs. One of the big stories in 2010 was that apartment demand was far stronger than the job production numbers would have suggested. And Greg, as we go into 2011, how important is job growth for the apartment sector to be able to maintain the revenue growth we've seen so far this year?
Well, Jay, what we are anticipating for the coming year is that the apartment sector will continue to capture more than its fair share of total housing demand, but we are going to get in an environment where we're going to start raising rents pretty significantly, and so that gets tougher to pull people out of other housing types. So to maintain the momentum that we've had thus far, we're going to have to start creating jobs at a little bit more aggressive pace than we've seen so far.
And Greg, let's pull up a chart showing monthly job change in the U.S. according to the Bureau of Labor Statistics in 2010. We've averaged around 100,000 jobs gained per month or so over the past year, but there's been notable inconsistency month to month. And so in 2011, going forward, what kind of job production is it going to take for the apartment industry to sustain solid revenue growth?
I do think there's pretty much a magic number here for 2011, and it's somewhere around 200,000 jobs gained per month. That will be enough to start to gradually draw down that unemployment rate. It will generate some new household formation and in turn some housing demand, including demand for apartments. And it's a pretty achievable number if you look at the forecasts. The National Association of Business Economists is predicting growth right under that figure for the first half of the year, and then a little bit over that as we get into the second half of the year.
And Greg, we all look at that total job number every month, but beyond that one number, what are you looking for in those subcategories?
There are a couple of things to pay attention to and what's happening as you dig down a little bit deeper in the data. First, I would point to who is actually getting the jobs. As we've gone through this initial phase of the recovery, we've had some encouraging numbers for young adults starting to get some jobs, and it makes a big difference to the apartment sector whether the person getting the job is 25 and is likely to be a renter, or if the person is 40 and perhaps is less likely to be a renter. The other thing I would look for is just where is the job creation occurring. We've had a handful of markets that have come pretty strong out of the gate, already producing significant number of jobs and in turn realizing some solid apartment demand. Examples: Washington, D.C., pretty much everywhere in Texas and in the Carolinas. What I would watch for in 2011 that could really shape the national numbers, what happens with those laggards? That would be places like Southern California, which has struggled a little bit, and another key example would be in Atlanta and also Phoenix, markets that are showing some momentum, but they are really big places that have huge holes to fill in given the performance they've had over the past couple of years.
And Greg, we all know that predicting job change is an inexact science, to say the least. And so what happens if job change is significantly lower or significantly higher than what we're expecting, what most economists are expecting?
Well, if we end up significantly lower than the expectations, we're really getting close to that double-dip recession scenario. That's bad news. It would mean that for apartments to continue to make some progress, they are going to have to really do a good job of pulling people out of other housing choices. If you look at what happens if the performance gets stronger than anticipated, that's an interesting question. I think that would really help the single-family sector. It would probably help single-family rentals. I don't know that it's going to actually do that much for housing demand in the apartment sector, because I think the share of total demand for apartments would come down a little bit, so the performance would be a little bit better for apartments, but not drastically better.
Thank you, Greg. And that wraps us up for today. Join us next time as we talk about what role the shadow market plays in the apartment industry in 2011. So until next time, for Apartment Market Dynamics, for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.